The future of uranium mining in Australia is looking brighter, with overseas demand steadily increasing. After reaching record highs in 2007, the price of uranium dropped dramatically during the global financial crisis. Now many countries are pushing ahead with nuclear power programs as a way of reducing their reliance on more carbon-emitting energy sources. While Australia is unlikely to join the rush, analysts believe the market will now see long-term growth. Emily Stewart reports.
Nuclear power remains in the too hard basket for Australia's politicians, even though it's being promoted in some quarters as a greener alternative.
The cost of carbon fuels, coal and oil, is rising. People are talking about emission trading markets, so suddenly uranium's the silver bullet solution to those sorts of rising costs.
Australia is perhaps the most parochial and the most backward in thinking on this. We're going to suffer quite a severe shortage of electricity supply in many states in Australia over the next 5 to 10 years because there has not been an investment in power stations.
It's a situation that's unlikely to change in the short to medium term, although it's a different story for uranium mining, which is winning more political support than ever before.
In a lot of ways, in the last few years, we've seen a lot of the restrictions eased off in the sense that we've seen a lot more support for uranium mining. So at a federal level, there's bipartisan support.
After sitting at $10 a pound for decades, the market peaked in 2007, with prices hitting $136 a pound. But the bubble burst during the global financial crisis, and uranium is now selling at $48.
It's now becoming a commodity market that resembles something like copper and aluminium, and the price as a result has become very responsive for that reason.
The biggest supplier of uranium is Kazakhstan, with Australia, Canada and Namibia also big players.
The total mine supply at the moment is actually about 60,000 tonnes per annum, and demand is about 80,000 tonnes per annum, with the difference coming from running down of stockpiles and the conversion of nuclear weapons to power station-grade uranium.
There are 440 reactors operating across the world, and China is the most active in building them.
Their total energy production is only supported by nuclear power to the tune of 2 to 5%. It's very small. They're essentially a coal-burning nation. And the national government sees that uranium needs to be lifted as a fuel option for the country so they can reduce their dependency on coal going forward.
Analysts say the global appetite for uranium means supply won't keep up with demand.
So there's a bit of a pressure point coming up, and anyone who's prepared to look a couple of years into the future will see that we really need quite a few more mines if we're going to match that gap.
Warwick Grigger says some companies are still finding that a poor reputation means it's difficult to find investment.
The uranium companies are still very much out of favour in the eyes of the investors. There are a lot of prospective mines around, but it's very expensive and very difficult for them to raise equity capital at the moment.
But the chief of uranium explorer Cauldron Energy disagrees.
There's not really been an issue getting funding going forward. It's more the state of the economy as a whole and the state of the mining sector. I think we move up and down just like any other commodity.
And with analysts tipping the price of uranium to rise to $60 a pound within a year, that future could suddenly get a lot brighter.